Hi everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at what happened to the markets yesterday and what we can expect from the markets for this current expiry, and finally what happened to our trades. So first we'll start off by quickly discussing what happened to the markets. If you actually remember, on Friday evening, US markets were almost down 3.5 to 4%. So Nasdaq was down 4% and Dow Jones and S&P both were down almost 3%. And this continued with Asian markets as well, where they opened a gap down of almost around 1%. But surprising thing is all the Asian markets saw some recovery, including Japan and Hang Seng. Both of them saw recovery towards the later half, and even India, which actually opened gap down closer to 16,900, saw some buying coming in. So if we actually look at the FII and DII data, so we do see that FIIs again sold for 1,700 crores, DIIs ended up purchasing for around 1,800 crores. But if you actually see the overall market breadth, you see that there are totally around 1,400 declines compared to close to 600 advances. That means the overall market breadth on the broader market side also was pretty negative. Now if we actually look at Bank Nifty, it outperformed Nifty thanks to HDFC Bank, which saw some very strong buying coming in. So it almost ended 1% higher, and not just HDFC Bank, even HDFC and Kotak. So both of them ended up performing well. So that's the reason we saw that markets steadily recover from almost around 16,950 all the way to 17,070. We closed at almost the highest point of the day. So this is one positive news, that we are finding very good support at 17,000 as well as 16,800. Every time the market is trying to break, we have a strong support coming in from DIIs where they end up buying and making sure that market holds above 16,800. So we also have the LIC IPO, which is opening up right now. So 4th is only for anchor investors. Retail investors have a subscription date from 5th till 9th of May. And we currently aren't subscribing to the IPO, but we might change our view once the subscription day starts. If we see a lot of demand and the grey market premium increase over time, so then we might change our view, but currently we are not subscribing to the IPO. And one more thing is that we believe till this IPO is over, the market sentiment will be held high. So they won't let a huge sell-off occur until the LIC IPO is over, because government really needs this disinvestment, and if they don't get it, they won't be meeting their targets. And that's the reason if the sentiments in the market are low, then the subscription will be quite low. So our belief is that till the IPO is over, we might not witness a huge sell-off. And also one more thing what we should note is global markets have corrected quite a lot. So it is not just 1 or 2%, but they have almost fallen close to 10 to 15% from their highs if you look at indices all around the world. More or less, we can also say that we might not be headed for a huge crash from here, but the thing is we might still fall further. But bottom should be somewhere near is what I feel for the global indices. At least most of the global indices are down over 15%. So this will bring us to the next question, what we can expect from the markets for this expiry. So we still have 2 more days, that is Wednesday and Thursday. So we will check the charts and open interest and make some analysis on the screen. So I'll be quickly moving on to the screen recording right now. And also we had spoken about something really exciting coming up on 30th of May. And we had already tweeted about this in our Twitter, so you can go and check it out. We had asked people to guess what exactly it is, and most of them are actually getting closer. So they haven't got the exact one, but they are getting closer. So let's see if you can get it right. You can also comment in the comment section below and try to guess what exactly it might be. And meanwhile, if you're liking the content on this channel, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining. Hey everyone, welcome to the video again. So we'll be quickly starting off by looking at the charts of Nifty and Bank Nifty, and later we'll discuss open interest as well. So the thing is, as we are discussing over and over again, so Nifty and Bank Nifty are consolidating in a broader range. So this is exactly what we discussed in the previous video as well. So even in this video, if we look at it right now, so the outlook from previous video up until this video hasn't changed at all. So it remains to be the same, that is 16,800 all the way to 17,500. So we can see that from almost 18th of April, so it's been close to around 20 days. So Nifty is in a very broad range and it is consolidating right over here. So every time we see that market hits closer to 17,500, there is a sell-off, and as it comes closer to 16,800, immediately people start buying. So especially DIIs, they immediately start buying around 16,800. And the surprising fact is that hardly we have seen Nifty close below 17,000. So every time Nifty tried to close below 17,000, the same day or the very next day, Nifty comes back above 17,000. So when we quickly jump to open interest, again we do see that even though the market is trying to come below 17,000, we are seeing a lot of 17,000 put writing, and that clearly shows that people do expect some support to come in at 17,000. And on the higher end, we have some significant call writing, and especially towards 17,500, we have the highest call writing. So we can expect some resistance to be faced around 17,300 and also 17,500 to act as a very strong resistance. This is the outlook for Nifty, and nothing much has changed. So it still remains to be the same. The range still remains to be the same of 16,800 to 17,500. So when we come to Bank Nifty, again here, so we will just be looking at the open interest now, because again here there is absolutely no change in the view. So if we actually look at the broader picture of Bank Nifty, we see a very strong call writing at 37,000 and some really strong put writing at 35,500 and short straddles at 36,000. So if you remember the discussion what we had on Friday with regards to Monday's outlook, again we had specified a range of 35,500 to 37,000. So this outlook still remains intact, because again, like how we saw in Nifty, as market comes towards 35,500, we see some strong buying coming in banking sector, and Bank Nifty immediately shoots up. And as it moves towards 37,000, immediately there is a sell-off and it comes back towards 36,200 and 300. So this is not once. We have witnessed this thing over almost 2-3 weeks. And even before 2-3 weeks, if you actually see, Bank Nifty was consolidating in a broader range itself. So that's the reason right now I don't see the markets heading anywhere. It should consolidate around this range itself. One thing is that we are short on 1000 quantity Nifty. But we have also done a 17,500 short straddle. The idea is, in case if the down move continues, then we have futures which will be giving us a lot of profit. But let's say there is an up move, then 17,500 short straddle is going to cover for most of the losses given by futures. So this is the broader idea what we have in mind, and that's the reason we have taken this trade. So let's see how tomorrow goes. It will continue with the intraday trade. So before ending this video, we'll also have a quick discussion about what exactly happened to Monday's trade. Monday, we started off with a short straddle at 16,950, and later we also did a 17,000 short straddle. So our entry times are 9:30, 11:30 and 1:30. So the thing is, since today is Tuesday and today was a holiday, if I open M2M, it will be showing 0 because the prices would be reset. As the market started to go up, the stop loss on the CE side actually got triggered. So 16,950 CE got triggered, whereas the 17,000 CE and PE, the stop loss was not triggered, but only for 16,950 CE, the stop loss actually got triggered. So later what happened, the market more or less started heading upside. The good thing is we had some additional put legs because the CE stop loss was triggered, and we had some additional put leg, and the market ended closer to 17,064, and both these stop losses didn't trigger, and that's the reason we were able to end with some good profits of around 3,20,000. We have started this month on a positive note, and let's see how it goes. And with this, we also come to the end of this video, and this was just a quick trade review of what we did. It was mainly short straddles, and as we did the short straddles, one stop loss got triggered, and more or less the other two legs ended up consolidating there itself. So with this, we also come to the end of this video, and if you have liked this content, do not forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining.